almost trading flat here. The volumes actually are not that much. So again, that is not basically coming as a directional cue here. Now, in terms from commodities, what we were talking, let's also basically shift our attention to a development which is going to be a marked development for the commodity business, for the exchanges. In fact, for the other asset classes also, the Sebbys basically has now given a firm timeline of October 2018 from where universal exchange could be seen. The exchanges in equity and commodities, they actually can launch the new instruments in other asset classes. That is going to look very interesting in terms of trends and opportunities for traders, brokers and exchanges also. Now, what basically this could mean in terms of opportunities, in terms of back-end cost, in terms of compliance requirements here, let's try and understand all of those answers for the questions from the MCX management, Mr. Mrugank Paranjape, in terms of what it means for his company. Mr. Paranjape, again, first of all, wish you a very happy new year. My first question to you would be that how does 2018 look to you from MCX perspective in terms of opportunities?
So I think if we look back at the 9 years of this fiscal year, and basically the 2017, a lot of groundwork was laid for really expanding the commodity markets. And that to me is the foundation for what we all have to do in 2018. 2018 is going to be all about some very serious execution, and whether it is in terms of onboarding many more institutional clients in the categories which are already approved like AIFs, or the soon to be approved categories like mutual funds and PMS, whether it is in terms of ensuring that we get a much wider participation in the options contract. Again, we've had a very good initial response, but I think it is really to build on that initial response and make sure that it becomes a very, very deep-rooted and viable contract across multiple commodities. So that's in terms of product expansion, and then to look at how we can introduce indices into this whole basket. So I think a lot of it is going to be about deeper penetration of the markets, making use of the fact that the Reserve Bank of India allowed banking subsidiaries to now enter commodity derivatives. That's again, as a process we have seen begun already, but we will also see at least a couple of other brokerage houses becoming members of the exchange in the next month or so, and therefore it's all going to be in 2018 about execution around that third pillar of distribution. So to me, product, participants and distribution, the three pillars that we've always spoken about for the commodities business, it's going to be a lot about execution around these 3-4 pillars. Now, to your other question about what Sebbys recently announced, and I think that's something which you can speak more. But I think that's something which we are evaluating, but look forward to that as well in 2018.
Right. So then the question comes here is that we know there are multiple exchanges across equity and commodities, currencies. But then also basically because equity basically is the larger volume asset class, if I talk about the trading volumes here, and then again now basically different exchanges, they actually can go into each other trading areas or business areas. So the next actually assumption would be that competitive intensity perhaps is going to increase. So what's your understanding about the competitive intensity after the universal exchange introduction from October 2018?
So I think it is well known that it is not easy to get into any business, and that holds true not just for commodities, it just holds true for every asset class and every instrument. I think we have been seeing, in spite of being so well entrenched in the commodities segment, that when it comes to a new contract, just introducing a new commodity within the futures segment, or introducing a new instrument, which we did recently in terms of the gold options, it is a lot of hard work. It is engaging with the entire physical market. It is engaging with the end-to-end value chain, and therefore it is not an easy task. And that holds true, as I said, even if somebody was to think about entering currency or equities, etc. So it would be a misnomer if anybody thought that it is easy to enter a business segment. It is going to be a lot of hard work for anybody who does that, whether it's us entering a new business segment like currency or equities, or it's any other exchange entering into commodities. So that would be the simple answer to your question.
Right. So from that context, Mr. Paranjape, are you looking at October timeline from the interest of entering equity business also? Because as I understand, there are a lot of back-end requirements. You need clearing corporation setups. Now again, basically, you need warehousing commodities. But again, similar sort of arrangements have to be made in the back-end. So is October the timeline where actually you are looking for entering equities?
So I think let's just look at the broad parameters of what you need to have. You need to be ready with your understanding and your engagement with the end users of that particular asset class, whether it is the people who hedge or whether it's the people who trade. You then need to have the entire trading and settlements platform. And then you need to have the clearing corporation, the ability to settle those trades, the physical market infrastructure, etc. Now, if you look at that whole piece, I think first we as an exchange need to evaluate between equities, between interest rate derivatives, between currencies, what makes sense. We have spoken about this in the past. We do believe currency has a great adjacency to our business, and it's something that would make a lot of sense for us to look at. In terms of the readiness, the trading platform, of course, we have to get it ready, and that's something which we have been scouting for. We have made some inquiries, we've done an RFP, so we should be ready in absolutely good time when it comes to the entire trading ecosystem. Most importantly, our clearing corporation will go live. We expect it to go live somewhere in the month of April or so. And once we are there, then the clearing corporation is really ready to handle any asset class. And to be very blunt, I think if you've got commodities perfectly handled, then it's much more easier to handle the other asset classes, because all the other asset classes are actually completely cash settled. Whereas commodities, there's a huge element of physicals as well, which we will be ready for. So clearing corporation, we should be ready by April, May, and trading infrastructure, we should be ready in time. But which asset class to look at is a broader discussion. It will involve our board, it will involve shareholders, it will involve stakeholders, and it's a decision that we will come to in the next couple of months.
Right, so which means clearing corporation, again, that basically is going to be an important development in terms of your readiness for launching new asset classes here. But then also, as we know, Gift City, again, that basically is also a free regime, which also actually is providing an avenue to actually launch into different asset classes. So do you believe that Gift City, again, could be a part of those plans where you could have two different business models of asset classes from two different market regimes here? And because again, you can have commodities from there also.
So look, Gift City is an entirely new paradigm. It's something where it's the sort of assets being traded there, the sort of people who have an interest in trading those asset classes is very, very different from the onshore India piece. So Gift City by itself is a very, very independent decision. I don't think the timeline that Sebbys has announced for the domestic market will have any implications. We continue to look at Gift City as something that is to be evaluated, but it's something where it's an independent decision and not linked to this new regime that Sebbys has announced for the onshore markets.
Right. Let's also talk about another set of trigger which the market has been watching very closely, which is the ramp up of volumes in your gold option contract, which you had launched just a few months back here. So what's the stage of volumes now, the average traded daily turnover? And also, because now you have an experience actually of completing an expansion of the option contract, are you actually now moving nearer to launch of new option instruments?
So I think to your first point, it's been just we will probably complete about 3 months after the launch of gold options. This month we will have the second maturity of our options contract. Our first maturity went through extremely well in spite of the entirely new concept on the development into futures. It worked out extremely well. So I think that is a good learning, and it's a good experience that we have behind us, and very encouraging to see the market adapt itself to this new product. In terms of participation, of course, we would want to see a much deeper participation, much wider participation, and better volumes. But I think we have to look at it in perspective as well. If you compare how the options to futures turnover in the gold contract looks as a percentage, we actually compare very well to international numbers. But if you then start comparing to Indian equity numbers, most of which are very, very index driven, there is a gap. But then, the Indian equity markets is a very, very mature and evolved market in the F&O space. It's been there for 15 to 18 years, depending on which contract you talk about. So I think it's, again, not a very fair comparison just now. So in that sense, I think very early days to start judging, what would be the right number for the options contract to be really benchmarked against. But I think the response has been great. And to your second question, we are absolutely ready and eager and in discussion with SEBI to see how and when we can apply for the next set of contracts for options in futures.
Right. But I also want to ask you that since now actually you have launched option contracts in commodities, and as I understand, you were just talking about it, perhaps currency again is the next big focus for you. But then to me, the next again logical question would be that you have an experience in terms of handling derivatives and commodities. You just spoke about that if actually you have handled the commodity deliveries, the warehousing, the clearing, then again equities basically is not going to be more complex than commodities. So, and also when we see the volumes in the equity derivatives, it actually tells you that that's a large potential segment in terms of money, in terms of turnovers, in terms of clientele. So from that perspective, don't you think that again it will be a good opportunity to actually be present in the derivative segment of both commodities and equities also?
So I think the equity market is large, no doubt. However, as we all know, in any asset class, unless there is some regulatory construct which creates a sort of reason for multiple pools of liquidity to be created, it is very difficult to split liquidity, and that holds true for almost, like I said, every asset class. So looking at that, of course, our learnings in commodity derivatives will be a great learning. It makes us very well equipped to handle other asset classes, but where do we get the best results for our efforts is something to be evaluated, and there, whether it is currency or whether it is equity, is a big question mark.
Right. So, Mr. Paranjape, I also want to ask you about one of the concerns which traders had when actually this was being announced from SEBI, is that how sustainable is your competitive advantage when it comes to both again base metals and energy trading here, because I would believe both BSE and NSE, they will now look at this lucrative sort of trading segment with great interest once actually from October the universal exchange starts coming into play here.
So I think we do believe that we have a good competitive advantage. It is sustainable. We have proven it in the past. We've been through one crisis 3-4 years ago, and in spite of that crisis, we did not lose market share. What it really convinces us is that as long as you have the right product, as long as you have the technology to support it, and as long as you have a deep participation of the entire value chain which looks at your contract, whether it is the hedgers or the traders, but it has to be across this entire value chain that you have to have participation. But if you have all these three things in place, you will have a good competitive advantage to sustain against anybody who is entering into that segment. So yes, we are convinced, but we would like to be on our toes and make sure that we are in the same shape as and when competition comes in.
My last question to Mr. Paranjape, what would be your budget expectations from the exchange perspective for the commodity business?
So I think in terms of a lot of the initiatives, in terms of newer products, etc., those are all been covered. They're all within the SEBI roadmap that SEBI has laid out, and I don't think we need too much more in terms of regulatory support or government support on the budget side on that. I think there are two specific asks which we have been looking forward to in this budget, and we are very hopeful they will be catered to. One, given the nature of the options contract in commodities, that it's an options on futures, and therefore it has an incidence of double taxation, which is not there in any other product class or in any other instrument in the country today, and we are hopeful that the government will sympathetically look at this so that the options contract will receive a much needed boost in terms of the volumes. Secondly, I think there has been always the debates around STT, the rates, etc. But we believe that our members are very keen to see the benefits around Section 88E restored, and we believe it would be something which is a very just demand, and we hope that will be fulfilled as well. So those are the two things that we are looking forward from this budget.
Thanks a lot, Mr. Paranjape, for all the insights into what basically MCX would be preparing ahead of the Universal Exchange launch by October 2018. Wishing you a very happy New Year 2018 from the entire team here at BTVI. Moving on from MCX now again, let's talk about the commodity markets again. It has been an interesting start to 2018. Let's bring in our guest, Ajay Kedia, Managing Director at Kedia Commodity Comtrade. He joins us live from Mumbai. Mr. Kedia, the first question to you would be,